Hey everyone, I hope everyone is doing well and had a good day. This is the overview of the Emini 5-minute chart for Friday, September 20th, 2024. Because it's Friday, we will look at the weekly chart. So it's the end of the week. Here's where we are. The market has a lot of overlap here, and the range was contracting. Here's a low, higher low, higher low, higher low. But then we had a high and a lower high. The market's attempting to break out of this lower high. But you can see what happened at the all-time high. Traders were selling. So look at the bull breakout bar. It's an inside bar, so it's completely within a bear trend bar. So there's really no breakout. We're within this bar. And then this bar breaks out to a new high, but pulls back and closes well below the breakout point up here. Does this look like the start of a strong bull breakout? Or does it look like a test of the top of a trading range? Maybe, a lot of overlap and sideways here. We went down, we went up, deep pullback, second leg up. This could easily be a second leg in a trading range, and we may be high in that trading range. We can see the same thing if we look at the daily chart. This is the extended hours chart, so the Globex. And I like looking at this for just the reason about the gaps. We can look at the day only. And I did have some thoughts about this coming into the day. So the market attempted to break out of the top of this trading range. Lots of two-sided trading through here. We have two legs up, one deep pullback, two, and then disappointing follow through on the breakout. Or you could say this bar broke out and then pulled back. That's a disappointing breakout bar. So my thoughts were there would be buyers below this low because it's a trading range with an increased risk of a downside breakout because of where we are, two legs up and at the top of an overall trading range. But that doesn't mean the market's going to go straight down. We've had this tight rally by the bulls, and at a minimum, we're going to need some sort of double top, more likely than just a V top, and for the market to just rally and then reverse into a bear trend. For the 5-minute chart today, we had a gap down on the open, and here's yesterday's low. So remember, I think there are buyers below the prior day's low. When I say that, it doesn't necessarily mean there are buyers directly at the low, but I am expecting at least a bounce there. So we come into the day with a gap down and a trading range bar and then a bull bar. And so far, it may be a breakout pullback. Maybe the market is rejecting the gap down. But if you think about it, the market's in a bear channel. We get a breakout of the channel line, and you can imagine the gap down as a bear breakout bar. It functions the same way as a breakout. So this breakout was probably strong enough for a second leg. So this could easily be a pullback, and most days, 80% of days, have trading range opens. Then we have a doji on bar 1, probably sellers above. We go above bar 1 on bar 2, but there's a lot of overlap, and you're following a gap down. So the odds that this becomes a bull trend from the open are pretty low, maybe 20 or 30% chance. We have an obvious magnet fairly close by, the prior day's low. And so we have a gap down. We're expecting a second leg, and that second leg could get us to that level. 3, a bear bar closing on its low. Might be always in short, but look to the left, we might have the bottom of a trading range over here. Follow through 4, so bear breakout and follow through. Can you sell the close? You could sell the close, but there's a lot of overlap. Traders might prefer to sell a pullback. And then we traded above 4. Was 4 a good stop order? to buy? No, the odds were if we went above this bar, it's consecutive bear bars, 3-bar micro channel. The highs of each bar are below the high of the prior bar. And we have bars closing near their lows. It's good for the bears. Context is all right. Gap down, weak reversal attempt, maybe getting continuation. And again, this magnet here. So the first target for the bears may be this measured move down of the bear flag, and you can see it takes us very close to the prior day's low. You can see traders sold above 4, probably going lower. Really not a decent double bottom, bar 1 and bar 4. You can see bad signal bar, probably have to go lower to find buyers. And then breakout 6. Might be a measuring gap. Bar 6 is either an exhaustive sell climax or a measuring gap. And if it's a measuring gap, the market could go down to here. We went a little lower on 7, but began to reverse up. But as far as buying above 7, I would not. Even though it might be 2 or 3 legs down, the bear channel is tight. So 1, pullback 2. Yes, it's 2 legs. You could say double bottom, bear breakout. So breakout of a double bottom, you can call it a wedge, 3 pushes down. But the signal bar is a doji, and again, the channel down is tight. So even though it's 2 legs, it's minor. And on a higher time frame, this is simply a bear breakout that will probably get its own second leg. So probably sellers above 7. We went sideways and then sold off again on 9. Now bar 9, more clearly 3 pushes, 1, 7, and 9. We're testing the prior day's low. And so there might be a couple of reasons to expect support here. You have 3 pushes down, you have a support level, the prior day's low. And even though it's 3 pushes down, it's a parabolic wedge, and parabolic wedges are minor. And what that means is you can expect a minor reversal and then another leg down, because remember, this is a breakout on a higher time frame. So we may get a deeper pullback, maybe we rally above bar 8, but I suspect there are sellers above bar 8. Also, think about what happened on bar 6. Any trader who bought below 1 or bought below 5 or 4, all these traders were trapped on bar 6 and the market went lower. And so this becomes resistance. If we get back to the bar 5 low, there's probably sellers there. Reversal, 2-bar reversal on 10, so probably going at least a little higher. We're expecting 10 bars and 2 legs after the wedge, but a minor reversal and then a second leg down. We tested the low of 5, and then the bulls, they have a breakout bar, follow through, but the follow through is much smaller than the breakout bar, and it's right at resistance. Probably sellers in this area, but bars 9 through the low of 9 to the high of 11, that was a strong enough breakout for a second leg, so probably buyers below, maybe at the midpoint of the rally, 50% pullback, and then a second leg. Low 1 short, but 4-bar micro channel, buyers below. They bought the 50% pullback and a little lower. We're probably going at least 1 tick above 12, but if we do, that will be 2 legs up after the wedge. And remember, parabolic wedge, breakout on a higher time frame. Expect 10 bars and 2 legs, and then another leg down. Now, when I say 10 bars and 2 legs, the reality is it's a parabolic wedge. The wedge is more clear on a smaller time frame, and the reality is if it's 3 pushes down on this chart, but it's minor, we might not get 10 bars. We'll probably still get 2 legs, but we only might get 7 bars or 6 bars, something like that. Breakout attempt 14, but lots of overlap, and it looks like bulls who bought down here or bought anywhere are scalping out, knowing that this is a minor reversal, and the bears still need a second leg down. 1 complex pullback, and then 2. So we'll probably get 1 tick below bar 9. Inside bar 15, going sideways might be breakout mode. Inside bars are contracting triangles, they're trading ranges on smaller time frames. So you can see we're getting higher lows, lower highs. 15 is a bad stop order buy, probably sellers above, sellers on the close. 16, good bear bar, might be a low 2 short, bear breakout, low 1, 12, low 2, 15, or better yet, 16, bear bar closing near its low. Good follow through, 17, acceleration, might have to go lower. At a minimum, I think we're going to the bar 9 low, and the bears are hoping we get a measured move down. We get the minimum target, bears get a second leg. This is looking symmetrical, so far a good looking bear breakout. Not very climactic. 5 bar or 6 bar micro channel, good for the bears. Burst reversal probably will fail, sellers above the bull bar. It's also an inside bar. And then almost outside down, 21. Now at this point, we might have 3 pushes, 1, 9, and 21. So this is another possible area of support. The market's trying to break out below the prior day's low. And that was a weak attempt. We got a deep pullback. This is a better attempt. Now the bears want follow through. A little bit lower, 22. But now we have a bull reversal bar with a big tail closing near its high. Always in bears can get out above that bar because it's 3 pushes down. Maybe it's a little climactic. It's also subdividing into 2 legs, 1, pause, 2. Always in bears can exit. Bulls, aggressive bulls can buy, and they're taking a chance that this could be the low of the day. Bad follow through for the bulls, but also not ideal for the bears. Low 1 short, but this rally from 20 up to here, 23 or 24, strong enough for buyers below and a second leg. And then you can see we went outside up and went straight back to the prior day's low. I'm pressed for time today, so I have to speed it up, and I'll just kind of talk through the day like this. So the bulls get a rally strong enough for a second leg. We pull back, we get a second leg, we pause, we get a third leg. So 1, pull back, 2, pause, 3. 3 pushes up, you're expecting a minor reversal. It's another parabolic wedge. Here's our minor reversal, and maybe it's around 50% of this rally. So you can see from the start of the rally, after the pullback, 25 to 27, here's the midpoint. That's just about where bar 29 tested. You also have traders. Didn't mean to get rid of that. We think about that third buy climax. You think about breakouts in general, they trap traders. And that's the importance of breakouts. So bar 27, think about it. If you're a bear, you see leg 1, pull back, leg 2, pull back. Maybe you get leg 3. Here's a 2-legged rally to the moving average. Low 2 short. At the trend line, you get a low 1 here, low 2 around here. Maybe this is a bad high 1, you're buying at the moving average. But then we got bar 27, and that's a little bit of a surprise. We're breaking the bear trend line, and any trader who sold above 26 is trapped on 27, and bulls who doubted the breakout are trapped out of a good trade. So traders will set limit orders to buy the high of 26, looking for this to be its own major leg 1 parabolic wedge, so minor wedge, and on a higher time frame, simply a breakout. It should pull back and then get a second leg. And the minimum target, I look for the close of 27. You could also look for the second leg to go 1 tick above the high of bar 27. So when I'm looking for a minimum second leg, I'm looking for a test of the high close. It's a little more conservative, and it depends on the context. So here's a breakout, pullback, testing support, maybe the prior day's low, maybe the 26 high. Somewhere in this area, traders were trapped, and you can see we tested it, we bounced. Going sideways, again, I'm sorry, I have to speed it up here. Sideways, so breakout mode, but after a good rally that should get a second leg, the probability favors the bulls for a second leg. The bears, do they sell below 33? Probably not. The channel up is too tight. The signal bar is an inside bar. And if we think about the market cycle, let me see if I can find, a quick example this works. This whole day works. So the gap up, we had a spike, or we can call this the spike, pullback, and then bull channel. Channels evolve into trading ranges, and that's what we had here. And so even if you could imagine a bear bar here, you can see we rallied, pulled back, channeled up. So up to that point, you'd call it a spike in channel, bull trend. The expectation after the channel phase is a transition into a trading range, and we'll probably come back down and test here, or even down here. And that's what we did. So we went sideways. So that's the market cycle in a few words. So if we think about the opposite direction, here's a bear spike, pullback, and channel. Channels evolve into trading ranges. And the top of the trading range could be all the way up here. And then you get this rally, brief pullback, going sideways, but the odds favor another upside breakout after this rally. Breakout 35, maybe traders buy the close, thinking we'll get at least up here. And then a tight channel, you can see right where 41 tested, and then sellers. So bulls, at this point, there are a couple of open gaps, and you can see no overlap between the high of 24 and the low of 29, and then same with over here, maybe the high of 32, the low of 37. Even here, still an open gap, at least a negative gap, the body gaps. The bodies do not overlap, so it could be a small pullback trend. The problem is the overall context, a couple of big legs down, a couple of big legs up. I mean, there were also negative gaps through here for the bears. And then the market went all the way back up to the high of the day. So this could be an overall trading range day, and we could be at the top of the trading range. And that's the problem with bulls buying up here. Up here, we get an expanding triangle, and that's a breakout mode pattern. So the bears are hoping for a reversal. We're at the top of the trading range, breakout mode. The bulls are hoping it becomes an expanding triangle bull flag, and we get trend resumption and a breakout, and we test higher prices, maybe up here, maybe the close of the prior day. But then we're at the top of the expanding triangle, disappointing, follow through for the bull breakout, more disappointment, 3 bars against you, 4 bars against you. At some point, the bulls may give up, 5 bars against you, and then we have a give up bar, 54. 54, a little bit climactic, and you can see testing the 50% pullback. That's such a common thing to see in trading ranges. So if we think about it, this rally was fairly strong. It had open gaps. It's like a brief, small pullback trend within an overall trading range. That should get a second leg up. But it's a trading range, so we may get a deep pullback first and a delayed second leg, and that's very common in trading ranges. Markets are fractal, and the same can be said about 55. It's a bear breakout, but it's climactic. It's a big bar, and it's racing to the middle of the range. You're going to have bulls buying here for scalps, and you're going to have traders looking to sell a pullback rather than sell the close of this bar. Breakout, follow through, and then sideways at 57. The bears are hoping for a measured move down, and that would test somewhere down here, this stop order. So bar 21, if a bear sold on a stop order below bar 21, they were trapped. If they scale in higher, they should be able to avoid a loss. At this point, if you sold below 51, your average price has already been reached. You would have been able to avoid a loss on the entire trade, break even right here. Is 57 a major reversal? No, probably a minor reversal. This should get a second leg down, but it's a little suspicious. Big climactic bar, and then a small follow-through bar, and then a lot of overlap. This could be an implied pullback. And again, if we think back to the market cycle, we have a spike, a pullback in here, the market may start to channel, and then we could easily come back and test the start of the channel, the high of 57. 57 may have been enough of a rally for a second leg, kind of like 22. But here, we're expecting a second leg down. The buyers may not come in until below 57. Spike in channel for the bears. And it's good. It's a maybe, I think it was a 12 bar micro channel for the bears today. But the problem is the overall context. We have bears trapped over here, maybe at this price, the high of 24, traders sold above. Let's see where that takes us. That takes us to where we're testing here. So support at that level. And then if you're thinking about the market cycle and probabilities, spike in channel, bear trend, and channels evolve into trading ranges. So what are the odds? What's the probability that we sell off from the current market price to the same distance as the start of the channel up here? What's the probability we fall down here before we get back up here? If you're going for 1-to-1, if your stop is here, you're selling here, your reward is here, your target, you have to be at least 60% certain. And I would not be 60% certain here because the market's in a trading range. We're testing support. There's probably disappointed traders. Bears getting out of shorts here, buying back shorts. They scaled in higher, and bulls who missed the rally, buying the deep pullback to catch the second leg. Are you 60% sure we're going here before here? How about now? So if you were 60% sure here, maybe you're 55 here, maybe it's 50-50, maybe it's getting even less. And that's the problem with selling in this area. And then we got a vacuum test of the start of the channel. Maybe the start of the channel was the 56 high. Either way, it was somewhere in here. Now we have a completed structure, spike in channel, and then trading range. The market's in breakout mode. Now, I kept talking about this. This is strong enough for a second leg. Here's a deep pullback, and this may be the start of the second leg. So even though it's a 12 bar micro channel, the market can do things like this and reverse micro channels when it's in a trading range. I remember also seeing the 15-minute chart today. We had a 7 bar bull micro channel. We had a very brief second leg, and then the market sold way off. And that's interesting. You can see that stop order on the 15-minute chart here. Traders trapped on this bar if they sold above that stop order. If they didn't take the buy, they're trapped out. So traders, that's why Al talks about break-even stops. And traders will buy here. And that's why having a break-even stop, if you did buy, in the reality, you should have taken profits up here. But if you did not, this is the worst place to get stopped out. It's probably support and a second leg. So we're in breakout mode, and now we have a bull breakout. And this is strong enough for a second leg, and it may be the delayed second leg from this. Breakout, follow through, more follow through, but not ideal to buy up here. Traders would prefer to buy a pullback. Most breakouts pull back. Inside bar, and 66 was a bad stop order sell signal bar, probably buyers below these bars. We fell below the bars and found buyers. Maybe we have a brief pullback and then a second leg. High 1 buy, you can call it a high 2 with 66 or micro double bottom. Traders bought. We're racing up, testing a magnet. That was a trading range, this expanding triangle. The midpoint's a magnet. You can see we actually tested above it, and we actually rallied even more into the close. But at this point, what's the problem? 3 pushes up. 1, pull back. 2, pull back. 3, high in a trading range. 2 legs up on a trading range day. You can also call it the top of a bull channel. So maybe it's a broad bull channel. And if you're buying at the channel line, you could be buying at resistance where bulls are taking profits, and we can get deep pullbacks like we got here. And that's why we sold way off into the close. For stop order trades today, I thought it was reasonable to sell below 3, sell below 4. The low 1 on 12, a little aggressive because of that pullback needing a second leg, but then selling below 16 I thought was reasonable. 17, okay. And then aggressive but okay to buy above 22. but probably better to wait for higher probability. When you get the breakout, you look to buy a pullback, maybe buy the high 1 above bar 31, maybe the high 2, 34. You get to the top of the range, you see 3 pushes up, you start to look to take profits. Somewhere in here, it becomes always in short, and let me back up for always in. On the gap down, might be always in short on the open, but not really clear. But then you get consecutive bear bars. At that point, might be always in short. 6 makes it more clear. And then through here, never became always in long. But then you got 3 pushes down. Consecutive sell climaxes were far from the moving average. It may be always in long here, but not really clear until you get bar 25 and follow through 26 and then 27. So always in long somewhere through here. And it never became short until, up here, bulls can get out below 42. Always in bulls can get out, look to re-enter above a bull bar, closing above its midpoint. This context isn't ideal because you're buying at the top of a trading range. And then you get out below bar 47, a bear bar closing near its low. And then same thing here. If you're still long, you get out below 51. This is a more credible sell. 1, 2, 3, top of the range. And this, I should have mentioned earlier, should have gotten a second leg, but it got a very deep pullback. And then it may get a delayed second leg, and that's what this sell-off was. And that's why we tested this area and found support. So stop order sell below 51, that's okay, but higher probability to wait for 53 or even 55, but not ideal to sell in the middle of the range. Stop order buy above 62 was okay. You could buy above 65, buy the close 66, buy the high 169, but you're probably getting out at the top of the range, and it's okay if you miss that. And then I thought it was reasonable to sell below 76, but not really ideal to trade in the final hour of the day or the final hour of the week. So okay to miss any trades through here. Where do we go on Monday? If you look at the day, the day only chart, we have consecutive dojis at the top of a trading range after 2 legs up. High 1 buy, but probably sellers above the high of the bar. Today's bar, Friday. And if we think about it another way, look at the extended hours chart. Rally, but bad follow through. We're at the top of the trading range. 2 legs and 2 legs here. 1, pause, 2, and a bad high 1. So again, sellers above. Limited upside. But we may have to go more sideways, kind of like here, before we go down over here. All right, thanks everybody for watching. I hope everyone has a good weekend and rests and recovers and practices and come back ready for a new week. Thanks for watching, and I'll talk to everybody soon.